Will real estate investors cause the housing market to crash in the next year or two? Now, in order for this to happen, enough real estate investors have to sell their property, flooding the market with inventory and pushing home prices down. Now, what would make real estate investors sell their property? It's not home prices going down, because as long as they're still making money on a monthly basis from rent, they have no incentive to sell their property for less than whatever they decide. What would force them to sell their property would be rents going down, which would make their investment less profitable, or it would be their mortgage rate adjusting, again, making their rents, making the return that they're getting on their investment either negative or less profitable. Now, the real question is, how many of these small single family home investors hold adjustable rate mortgages? Because if we look at large investors, those people, most of them hold large adjustable rate mortgages. You can't get a 30-year fixed rate mortgage on a 900 unit apartment building. But when we look at small investors, the answer is less clear. So if we see rents go down, or we see a lot of these smaller investors with adjustable rate mortgages decide to list their property, we could see home prices come down over the next year or two. Now, we're going to go over all the data, and you can make the best decision for yourself, whether you think this is a likely scenario or an unlikely scenario, based on the data I'm presenting. And feel free to go over the sources as well. They're all in the description for you. Before we get into it, my name's Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate. If you have any real estate needs, all of my contact information is in the description. I'd be happy to help you. And let's get into our first source here. So the first question I wanted to answer is, how many single family homes are owned by investors? Now, when we take a look at Wall Street owns about 574,000 single-family homes nationwide as of June 2022. Now, it might be a little more now because they've bought more properties, but it's not drastically higher than 570,000 single-family homes, which is about 3.8% of the single-family rentals in the United States, not the total housing supply, the single-family rentals in the United States. Now, when we take a look at all the single-family rentals out there, about 17% of America's housing stock, or 15.1 million single-family homes, are being used as rentals currently. So that's a big chunk of housing, right? If a good portion, if 30% of those people decide to sell, then we're looking at 5 million homes hitting the market, potentially all at once. Now, I don't think that's the most likely scenario, but that is the argument here, is if investors are in trouble and they decide to sell their properties, then more properties could hit the market again, flooding the market with inventory and causing home prices to come down. Now, when we take a look at adjustable rate mortgages, we see here that the large investors are struggling because of their adjustable rate mortgages. Now, they're not struggling as much as office or retail investors are. We see only 1.7% of multifamily loans are at least 30 days delinquent, compared to 7% with office and 6% for hotel and retail. But some large multifamily investors are still struggling, like this example in Brandon, Florida, 982 unit complex that was purchased with 80% occupied. Now their interest payments have gone up by more than 50%, increasing their monthly payment by their yearly payment, by $6 million, which is really hurting whoever bought this, the company that bought this large apartment building. Now, when we take a look at small residential mortgages, right, the mortgage market, these single family homes, which is the residential mortgage debt, even though these people who are buying them are investors, it's still part of the residential mortgage pool. And when we take a look at the mortgage origination volume, we see that most mortgages, this is 2023, most mortgages were 30-year fixed rate loans. Now, 2023 varied. We saw rates as high as 8% in 2023, and they were increasing throughout most of the year. So more people probably hopped into adjustable rate mortgages than usual, at least potentially. I don't have much data for previous years, but when we take a look at the origination for adjustable rate mortgages, we see that the 5/1 ARM and the 7/1 ARM accounted for about 3% of all mortgage originations last year in 2023. Now, this is only data from 1 year. I don't have good data from previous years. If anybody has a source for data regarding loans, of specifically investor loans on residential real estate, I would love to see that data. And then we look at other adjustable rate mortgages here. We have 7%. So a total of 10% of loans, residential loans originated in 2023 were adjustable rate. So we're looking at about 10% of that 15 million, when we go back to this first source here, this 15.1 million, roughly 10% we can use as an estimate. So roughly 1.5 million residential investors likely have single family or adjustable rate loans. Now, the number is actually less than that because some people who purchase investment properties purchase in all cash. So maybe it's around 1 million, but still that's a significant chunk of inventory that could come to the market if these rates, if they're no longer able to make their mortgage payment because of these adjustable rates. Now, when we take a look at other factors that could bring rent down, we see here that rental inflation has been skyrocketing up. Really, it's the largest factor in the CPI numbers, and we've seen CPI remain above, of course, the Fed's goal of 2%, but rental inflation, which is the largest factor, is at 5.4% year over year and up 0.4% month over month from April to May. And those are seasonally adjusted numbers, which is pretty drastic. The 4.4% increase month over month, that's almost a 5% yearly increase in rent across the country. And when we take a look at factors that could bring rent down, we see here, this is the multifamily housing starts, buildings with 5 units or more, right? Renters, although they might be renting single family homes, they're probably also considering renting units in an apartment building that has 5 or more units. And we can see here that multifamily housing starts are way down. They're down to about 2012 levels here at 278 in May of 2024. Now, when we take a look at where things were in 2012, we see that they varied between, 212 and then 285. So in 2013, they shot up to over 300. In 2014, they were consistently above 300. So we see rental real estate, these large apartment complexes that would bring relief to rents across the country. Building is down and less inventory will be coming to the market for for years to come, for at least the next 18 months or so, as these starts are low and appear to, they're trending down. They don't appear to be shooting back up. And a large part of that has to do with the struggles in the commercial space. We see that many of these investors are struggling. And so to get a loan to build a 900 unit apartment complex at these high interest rates, it's extremely expensive and not profitable for many of these large investors. So again, not a whole lot of rental inventory coming to the market in the next 18 months or so. And because of that, we're likely to see rents continue to increase. Again, I made videos about how if the Fed really wanted to stop inflation, they would lower their interest rates, which would cause rental real estate to increase, the building rental real estate to increase, which would cause the CPI rent number to go down. And all right, so when we take a look at single family homes as well, because this is a video about the single family home market, we see that single family homes, their building is still pretty healthy, right? The real estate market is pretty strong. We're seeing building above pre-pandemic levels still, despite these higher rates, although it's trended down in the past 2 months. We'll have to see if that trend continues, but still, we are still bringing a healthy amount of single family home inventory to the market. Which is a positive thing for rental inflation, right? The more housing units in general, the lower inflation will be both on the rent side and then also the increase of single family homes year over year. Now, when we take a look at what some of these experts are saying about the rental market and will the rental market continue to increase? Will it decrease? What's the situation? We have this expert who is the Rent Cafe study. Who is this person quoted? Give me 1 second here. Oh, here we go. Capital Max Chief Marketing Officer Chris Mullen says, "We are witnessing a massive surge in renters driven by factors like rising student loan debt, delaying home ownership for millennials, and a preference for flexibility among Gen Z." So there's a higher percentage of people who would normally be home buyers, but are pushed out of home ownership by high student loan debt, the high cost of real estate right now, and they're forced into the rental pool. And then, of course, he's arguing that Gen Z, they want to be more flexible as opposed to being locked down into a mortgage payment. So with a growing renter pool chasing a potentially limited supply of rental units, right, less rental units coming to the market, and vacancy rates are likely to stay low, which translates to consistent rental income for property investors. So overall, the market for renters appears to be strong. There appears to be a a lot of people who are interested in renting property and less units coming to the market. So, again, the supply and demand dynamic there, we should see rent inflation to continue, right? If the Federal Reserve wants to stop rental inflation, then they should lower their interest rates to help ease some of this pressure. But that's not what we're seeing. So to conclude this video here, will we see real estate investors sell their homes, flood the market with inventory, and cause home prices to come down? I'm not really sure. I don't think we're going to see rents decrease, which would, cause people to sell their home because their investment is no longer profitable. But if enough of these investors own variable rate debt, own adjustable rate mortgages that adjust to a higher rate that makes their investment less profitable, then we could see more single family homes come to the market and cause home prices to come down. So take a look at these sources for yourself. All the links are in the description, and make your own decision. It's really, the answer to this question really isn't clear. So I'm curious to know what you think. Leave me a comment. This video was made because somebody commented about this topic, about real estate being overinvested, and if all the investors sold, that could cause the housing market to crash. So if you have any thoughts about this video, or you want to see me make a video in the future, leave me a comment and I might be able to make that video. Otherwise, thank you so much for watching. I'll see you in the next one.